All right, everybody. This is Jeffrey, and welcome to this evening's webinar. I am not feeling great today. I've had just a little spring cold over the last couple of days, so I plan on doing a very abbreviated program tonight. As you can see from the title, the question for me is, has the pause refreshed? Or is this the long-awaited start of a new leg down? Futures are very high. Europe had a good day on Monday, which would have been today. We'll see what their Tuesday is like. But I think a lot related to those futures, a lot related to the DAX. The futures here are quite strong. I think the DAX was up 0.99, which is not a bad day, I guess you could say. All right. As I said, I'm not feeling great today, so this may not be up to my usual snuff, but we're going to go ahead and give it a chance again. And also, just to warn you, I'll be getting excited if my Red Wings can hold on and beat the Blackhawks. The disclaimer, as usual, is education purposes only. Anything I recommend in the spirit of education, that's it. I'm a doctor, not a broker. Most physicians lose money with their investments. And I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading, and I purchased all the tools that I use. I have a lot of things on my desktop. What I need is a real-time trading platform. I need something for analysis, which I love, HGSI. EdgeRater I use for back testing and also to get a sense of the market. I use Magenta for seasonal analysis. Their new version seems to be working well. And then I'm a big fan of Ian Woodward and Ron Brown and their various products, some of which are free. I learned a long time ago not to be a guru, but rather not to rely on a guru, but to become your own guru. And so these are the folks that have taught me: Ian Woodward, Ron Brown, Alexander Elder, Van Tharp, Position Sizing, Money Management, Bigelow, Candlesticks, O'Neill, really to me the godfather of investing. And if he's the godfather, then these guys must be his dons, his lieutenants, or Allison Catcher, the O'Neill disciples. And they've been very useful in teaching me how to trade, and then I adapt my own style based upon them. Tonight we'll look at the market from a top-down perspective. We will look at sectors, we'll look at stocks, and I'll make some thoughts about things that I might find attractive or not attractive. Now, I like to buy stocks that are pulling back in an uptrend, and I like to see a good signal to buy them, such as a Bongo or a Kahuna or a Pocket Pivot. So we'll look at those tonight. And I also like earnings growth. So if I have a style, it's retracements and pullbacks and stocks in uptrends that make money. When I say I'm interested in buying, what does that really mean? It means that the stock met my requirements tonight. Now, as we'll see, the futures are sky high, but it's early and things can change by the morning. And I'll only go long or continue long tomorrow in the setting that the market is going in the direction of my purchases or sells, and the sectors that I want to buy are the ones that are doing well or doing poorly based upon my direction in the market. So all we can do is look at things that appear to be setting up, but I wouldn't commit to anything until I see what happens in the morning. As always, we'll do a top-down review. We'll look at the market, industries, and stocks, and then a couple of shortcuts, and as available, some of the things on the right-hand side. Where are we in this market? Well, I keep thinking we're at that little red circle here, but every time I think it's over, we start to go back up on another leg higher. And, I'm starting to think we're going to go higher as well if I was a betting person. I think the employment numbers that really sunk the market were revised upward. I just get the sense that this market wants to go higher. We've gotten through May, but, it's still the summer months and still times where one might expect to see increasing volatility, decreasing volume, and we are overdue a correction of 8%. Before I go forward, be your own guru. Make sure you have the appropriate tools. Continue your education. and trade the market we have, not the one you think we should have. And lastly, you probably are aware that this is an out-of-date picture because the website went through a nice redo. If you go to the website, you'll see a new logo. High Growth Stock Investor is now HGSI Investment Software. Everything that you're used to are here, including for example, there's my name with my videos so you can keep up to date. So everything is still here, a lot more useful, I think, and it'll continue to improve. So on that note, let's get out of the PowerPoint and let's start this abbreviated session. So as always, I like to get an idea of how did the market do. So I'm going to pull up my end of the week review, and I always like to look at group performance analysis. And what we do here is we have a number of watch groups that we find, and I look and say if I bought them at the end of the day a week ago Friday, sold them at the end of the day this Friday, what was the performance week over week? And I do this so I can look at specific things that I do and that I own. How am I comparing to the market, although my stock selections are fluid and will change over the week. And then specifically, how is high growth stock investing compared to the market, because it's not always in play. So I look at the last week and I see everything is red except for just a couple groups at the top. Reversals, breakouts, Bible gap ups, all up a little bit. Some of my bearish scans were actually up a little bit, which is kind of disappointing. The S&P 500 was down 1.07% for the week. So even though I was down 0.5% on my stocks, I consider that a victory because I outdid the S&P. And much of my success was driven by one stock, which is Valiant, VRX, which I talk about frequently on these calls. It was not a great week for high growth stock investing, as both the HGS 100 was down 1.7% and the IBD 50 were down 2%. Not a whole lot to say here, except it was a rather tough week in the market. If I look at just the different buy watches that I do, all of them underperformed. In fact, even green candle lows were down 1.33%. Mobile breakouts from a squeeze. So all the usual suspects that I like to look at had a rough week. So it was actually my longer-term holdings and the fact that I have some short positions that allowed me to do a little bit better than the market itself, although it was still a rough week. When I look at TradeStation, for example, here's the futures. You can see the market ended here on Friday where my hand is. So you can see we're trading positive to my hands, up probably 6 or 7 points. If I look here, I can see it's up 7 1/4, and I believe fair market value would make that even more impressive. So let me just do a quick check here on my phone. So I would have to get out of this. And right now, the futures are about 7.59 above, 3.75. Which is about 6 points above fair market value. So the market is at least starting off fairly strong at this hour. NASDAQ up as well. In fact, all the indices are up, including oil, and I believe gold was up. I guess gold is down now. It's up earlier. If I look at using the elder indicators, I could see that a lot of the exuberance has come off the NASDAQ, which was riding up the outer envelope. It's blue, which means I pretty much have carte blanche to buy, sell, or hold. It's pulled back into the center of the envelope, and you can see the MACD line and histogram have turned down. One of the things that I was excited about was we did get higher highs with higher peaks in both the MACD histogram and the lines, sort of breaking the bearish divergence, which has been an overhang. You can see the weekly is still very up, but it's turned blue, and the monthly remains green. Just for comparison's sake, the Dow Industrial, take a few seconds as I tax my internet access when I do these. Here it comes. Pull back, you can see blue, and green looks very similar, and the S&P 500, if I remember correctly, will be similar as well. So what do I see? I see a market that lost last week, although not as much as it felt some of the days. I see a longer-term perspective, up weekly and the monthly, so short-term pullback perhaps, setting up perhaps for a reversal. And if I look at Edge Rader's buckets, let's see, I see that 2/3 of the stocks are still trading above the midland band, which is still bullish. And if you think back a couple weeks ago where I had a high number of stocks that are in the top, at the top or above the top of the Bollinger Bands, a lot of the exuberance has come up. So I still feel optimistic that we may see a move up at this point. Clearly the futures are helping to skew my view, but really not much damage has been done here as we are above the midline over at 65% of the stocks, and we've had some of the excess come off, so perhaps we are ready to move. If I walk into HGSI, continue my market analysis and go down to the current version of Woodward and Brown groups. I know they're being redone. Go to top down, so this is balanced over the last couple of weeks' performance. I see that the strength of the market remains in the small stocks, NASDAQ, small cap 600, Russell 2000. The Dow is up there as well, weakness in utilities, gold, silver, oil. Interestingly, the NASDAQ composite. If I look at 5-day performance, you can see volatility did have a big week, or a big 5 days. Gold was up 2%, silver 1%, everything else was down over the last 5 days. And as we already looked at, the S&P 500 was down over 1%. If we look at 1-day change, on Friday, a holiday day, one wouldn't expect a lot of volume, and there really wasn't a whole lot of movement, with silver and gold down, silver down 1.2, utilities down 1.1, and nothing up over just a teeny. So let's look at where the strength has been. Let's look at some of these. Let's look at the NASDAQ. And I'm not going to go into a big explanation of what's on my charts. I've done this a number of times in the past. And so I do see mostly green on my momentum indicators. I see a red candle high on the NASDAQ on Wednesday, which is right here. You can see it traded up. So this was a probable reversal day that we were waiting for. But interestingly, it fell down to the 17-day moving average, and it held. And so right now, I see the NASDAQ still looking pretty strong. Diminished volume on the Thursday and Friday, but I think there's holiday related. The problem is, and I'm just going to review it one more time, we do it a lot here, is at some point you expect a correction. You can go from the mid-September to the mid-November low, and we saw a 12% drop in 38 days. And from that time, we are up. The high on Thursday before the small correction was 25% in 127 days. Now, if you look during that time, we have a correction here of 3.6%, here of 3.5%, here, big shocker, 4.6%, and here all I got is 3.2%. So is that basically our correction, and is this market ready to run again, or do we still have a bigger drop down to hopefully no more worse than the 50 in us? And I think that remains the question. I mean, the futures suggest that at least early on it looks like we might get some support on that 17-day. Look at the S&P 500. And I'm not going to repeat that analysis. You can see I've done it several times. Same type of the story, couple of hammers coming in here on the 17-day. Looks to me like trying to put in an attempt at support after a red candle high on Wednesday. I look at the Russell 2000. Story is the same. 17 days seems to be holding. I go down, I look at S&P 1500, give me a good example of big, small, and medium. And as you can see, the same thing, that 17-day moving average looking like it might be some support. So the markets have pulled back. I think that it certainly would not shock me to see them pull down to that range in here where we get closer to that 8% all-in correction. But we may also go up here and take out new highs. And right now, the futures are suggesting it's more than new highs and not that 8% correction. But I also wasn't born yesterday, and I do expect at some point we're going to have to pay the piper, and we'll have that correction coming. If you look at the VIX, you can see the VIX continues to stall out at its 200-day moving average, but volatility has gone up from a base low here of about 11 up to about 14. Perhaps that's telling me that I should be more concerned about a potential bigger correction. Gold has been punished. Now it seems to be bouncing around the bottom, somewhat rudderless, but in a clear downtrend. Silver, similar picture. I was reading something in the Commitment of Traders report, which suggests that we are probably near a low in gold, as some of the pros are buying, and the cost of production of gold is getting pretty close to where the current price is, and that's not a sustainable story. All right, oil and gas. You know, kind of rudderless in a sort of a trendless bouncing up and down here. I think we're not seeing a whole lot of movement in the price of oil after this pullback in mid-April. And I don't know if I got natural gas here. I got gasoline. I think I got everything that I wanted to look at. So we'll finish with the dollar. The dollar has, interestingly, the last run up moved up consistent with the market, which I guess is a strong signal, as the market and the dollar have gone opposite directions. And perhaps if there is an improving economy here versus the rest of the world, we might expect that. But a lot of the commodity-based stocks suffer. And folks that have a lot of international exposure, selling, suffer in the setting of a strong dollar. And the dollar looks like it wants to pull back to me to that 50 and retest, but we'll see what happens there. So my take on the market is we've had a little bit of a correction, and perhaps we're bouncing from here, and we're at a natural support place on the 17-day moving average. And as we saw with the buckets report, a lot of the excesses have been wrung out of the market. Yes, I'm too bullish, and that's how I'm feeling right now, but that's the way I see it. As you can see, there's 146 securities. If I look at forced 2-day up, we're down to only 32. So that's a kind of a surprising finding, and that suggests that there's not as much strength in this market, at least over the last couple of days. Probably not a surprise. We're in the setting of a correction and reduced volume on the 2 up days. Now, the forced down groups only had 8, so predominant number of groups are up, but most of the groups probably just haven't had enough volume the last couple of days to even register. All right, so here's some of the top groups. Top-down investing pharmaceuticals index. So I mentioned before, we probably see this one, and here it goes right now. This is Valiant. It's one of my holdings. I've talked about it several times. In fact, you know, every time it's hit the 50, it's been a good buying opportunity. And it came down and touched the 50 on Thursday. And then Friday was really a perfect day in that it wasn't a gap up and gone. It traded up steady during the day until later in the day it announced that it put in a bid, which has been confirmed this weekend, to buy Bausch & Lomb for some private equity. And obviously the market loves it. It's both a generics and patented pharmaceutical company. A a lot of skin and eye products, so it must be felt to be a good synergy. And you could see just a huge move on tons of volume. Now, so you got all the momentum indicators green. You had a bullish engulfing pattern off of the 15-day moving average. You had tons of volume and a kahuna. All that could tell me that this is going to continue to run, but it ran so much in one day. It was up 13%. You wonder, was that the run? It'd be interesting to see. I expect to see maybe give us a little flag before it runs again. I'm not sure I would chase it until we get some kind of a pullback. Valiant was a big winner for me last week. Bristol Myers Squibb, the American Society of Clinical Oncology is coming up this week. And here's what my literature as an oncologist or cancer doctor is showing me. And let me just see if I can find that. So this is what we're seeing. Immunotherapy, the beginning of the end for cancer. Now, in my lifetime, I've seen this before, so I've learned to only get somewhat excited. But if you want to look at who the leaders are on the new immunotherapies, it's Roche, which is a little bit harder to buy here, and Bristol Myers Squibb. So they put a buy price target of $55 on Bristol Myers Squibb. And BMS is trading at 47, so that's an $8 move, so about 15, 16% from here. So that would be a nice little move. Obviously, it would be nice to have caught it here at the 50. Here's, to me, was the natural buy point, and it was a kahuna, volume, a pocket pivot, a DI crossover, and everything turned green. It's starting to get extended, but as I mentioned, $55 price points are out there. This is the kind of stock that I put on a list that if we have a horrible day in the market and everything gets thrown out, the babies with the bathwater, I look for stocks like BMS to load up on. Another one I like, and I've liked for a while, is Jazz. And Jazz is not a very exciting drug company, I think, from a perspective of cancer-fighting therapies, although they do have a new cancer product. But what I like about Jazz is, let me see if I find it. Jazz has had a lot of earnings growth compared to others in this space. And I'm a big fan of earnings. I think that at the end of the day, earnings growth drives stock prices. I mean, there's going to be fluctuations because of news events, but long term, a price is going to be related to the earnings growth, or the earnings times a multiple, a price to earnings multiple. And to me, that multiple is very much related to the multiples related to the earnings growth of the stock. So I like to see stocks with lots of earnings growth, and they drive higher multiples. So here is a pharma stock, and a lot of the pharma stocks have very low growth rates, including Bristol Myers Squibb, and we'll compare those two right now. This is Market Smith. A lot of you know that I like to use that. All right. JAZZ. So here is a Irish-based, so it's got good tax practices, drug company. Look at the earnings per share that's come into the stock. So it's growing at over 20 times multiple. It trades at a PE of 12. So even if it keeps the 12 PE, if it hits $6.15, that means for 2013 it should get above $72, $75. If it keeps the 12 into 2014, that's $90 with a multiple of 12 on 751. I love stocks that are growing their earnings at a bigger number than their multiple. Now, when I look at this company, it's only trading at $3.8 billion in market cap. So it's not a big company by any means. And so it's got earnings per share growth, slow, steady increase. So whether this is one that is a potential takeout target or it just keeps creating earnings growth, I've liked this stock for a long time. Now compare those numbers to Bristol-Myers Squibb, which is a much more known stock, loved stock, and you can see a higher multiple and a much lower earnings per share growth rate. So two different stocks. That's not BF, that's wrong. Ignore this one. The story is the same, but you can see a much higher multiple and a very low, much lower growth rate than Jazz. So I'd rather buy stocks that have high growth and trade at a discount to the growth rates, although clearly Bristol-Myers Squibb, a Kramer favorite, has a lot to offer it right now, offer us. Anything else that I liked on the big pharmaceuticals? Nope. All right, so let's shut this one down. Back. The next group was biotech. This group's been hammered off and on. And I own some Mankind, and which you can see is another reason why I made money, or I didn't lose much money last week. I don't know Vanda at all from a company perspective. As many of you know, I do have some, as an oncologist, I do get exposed to a lot of these companies. Vanda's in a big power run here. It has all green. It has a high group strength, tons of volume. I don't know this company. It looks extended to me, but something positive is going here. Perhaps they had new data, something worth investigating. I don't know this company. Ariad I do know, and Ariad looks to me like it's getting off the mat. It got clobbered when the drug got approved. I mean, came on the board and said that it was a compelling value here. It's really done nothing since I've said that, sort of oscillated around that price. At ASCO, they have a second compound, which is starting to gain excitement. When I see multiple days of kahunas, DI crossover, everything turned green, I think once again it's probably time to consider getting into Ariad. And I'm going to throw that into my buy list because it did not come up on my original review. I want to do that. Okay. So Mankind is one that I mentioned. I got into this earlier because of this gap up here, and then I forgot I had it still. And it started moving a few days ago, and you could see it broke out. I'll have to decide what to do with it on Monday, as it's obviously very extended. It had a number of Bible gap up days in a row. Everything is green. It kind of looks a lot like Vanda. I have to do some more research. I got lucky. I mean, I like this pattern here, and then pull back, and it really hasn't violated my traditional sell rules. As it stayed above the 17-day, it really hasn't broken it decisively ever since I bought it. You know, some of my other favorites, Gilead, I think continues to be a strong stock. Now they're moving into oncology as well. They already do well with HIV and with hepatitis C. All right, any other industries that look interesting? Computer storage and peripherals. Well, it's not based on fundamentals, but Seagate and Western and Digital continue to do well. And either of these look great. The problem with these is if you look at their earnings per share growth, there isn't much. And if I look out even on STX, you can see great dollars, small multiples, and no growth rates. Sort of been the story for a while for these. I'm going to turn off trade stations. It's killing my resources. That's it. All right. And so I own some Seagate. It takes a little bit of pinching your nose when you look at the fundies, but it continues to plow higher. Same thing with Western Digital. A lot tighter than Seagate, probably a better one to be in. Nice to get in these as pullbacks to their 50. Also up here, Hutchinson makes a lot of the components. Synaptics I thought was an interesting chart because it's pulling back to the 50, which has not been a bad time to get into the stock, and that might be one to put on your list to watch as well. Back, department store, see Dillard's, Macy's, Saks. All right, so Saks is the leader here, and Saks had great earnings come up. No, excuse me, Saks wants to go private or potentially merge with Neiman Marcus, so it's a play based upon arbitrage and not something that Kramer likes to do or I like to do. Just take a quick look at bond time. You know, I don't know this company very well, doesn't make money except for intermittent quarters, but it has been a retail turnaround. Actually, one of my neighbors became the CEO there about 5 years ago and has done a great job of turning around the company. B-O-N-T. But it's not a store that I shop at, so I can't really comment. And you can see it's turning its earnings around. So wouldn't be surprised to see the stock have a nice jump. You can see it used to be a $50 stock. But I get nervous with this type of earnings up and down. All right, I'm not that excited about these choices. Tesla, one of my friends, AK, asked me if he should short Tesla, and I hope he listened to me. It's hard for me to short big momentum stocks, and this stock has had some great fundamentals to add to its the play. The founder buying $100 million of new shares is a pretty strong fundamental message. Becoming profitable for the first quarter is a pretty strong fundamental message, and it continues to break out at new highs. Not sure I put in a new long position at this point because it has gotten pretty overbought, but I'm going to be short in this stock. Internet retail, change the mix group. Take a look at Expedia. None of these made it to my favorites of the week. I don't like, it's below the 200-day moving average. It's in a downtrend, so I would have left it alone. None of these make it for me. Industrial conglomerates. I didn't look at any of these on my chart reviews today, but just curious. This is what top-down investing is. Siemens pulled back to the 100, gapped up here as an ADR with a kahuna on Friday. Might be one to look at. Tyco International, yeah, kind of an old one, not that excited. Semiconductor equipment, and then movies and entertainment. Wafer. Cup, kind of a handle and breaking out. Doesn't look very impressive here, but I think when I looked at it under MarketSmith, it was a little bit better looking. And this is involved in the solar industry, which is taking a run. So think about this. If they're truly going to get 16 cents in 13 and grow to 51 cents in 14, I doubt they keep their 25 multiple. But if they drop to a multiple of 18 per se, it's a $9 stock. It's trading at $7.45. That's a 20% gain. If it keeps its multiple, it grows its multiple, it's a big move up. So this might be one to start to nibble at, especially if you can capture it on a down day where you get a pullback. Cymer was another one that looked good on my review. It had a big gap up here and a slow, steady decline, incline. A couple of pocket pivots last week. Everything is green. And I don't know this guy from Adam, S-Y-M-I, C-Y-M-I, I'm sorry. Wafer steppers and scanners. I have no idea that, but this is what's impressive here. Look at this earnings per share coming into the stock. If it keeps a multiple of 50 on 3, is this a $150 stock? I don't know, but it might be one to look at. Great earnings per share growth coming in. It's been a big mover in the past. It was a $90 stock in 12, and seems to be continuing to run here. It's not a cheap stock. All right. I'm getting tired, but that's how I do my top-down review. Sorry that I'm struggling a little bit today. Let's see what's on this one. Yeah, these have been other big players, and I'll look at Disney and Lionsgate before I move off this part of my product program. And you can see Disney pulled back, had a pocket pivot on Friday. I think it wants to run again. It's still got good earnings. It's had some great theatrical releases such as Iron Man, and its parks are humming. And then Lionsgate Entertainment has been a steady performer for me. I wish I got into it before here, but that's about where I got in. And it just continues to go up. Kahuna on Thursday, good day on Friday. I have continued high hopes. Why? What do I like to buy? I buy stocks that have pulled back, that have earnings, and I look at the earnings per share growth on Lionsgate International. All right, I'm about done and spent. I did my group inclusion filter today, and here's the results that I found. Let's take a look at these real quick. And by industry, the biotechs that made my group inclusion filter. So these are the strong stocks: Biogen, Celgene, Regeneron, some old favorites. Pharmaceutical companies, activists, which is Watson, there's Jazz. Santoris, I didn't mention, is one of my favorites. Great earnings per share growth, although slowing down, but the number gets bigger. And it really was a nothing stock and has really taken off of late. I made some decent money on that one. Like that one a lot. Hertz and Avis continue to be strong. I saw a number of other trucking stocks today that started to look interesting as well. There's Lionsgate. So these are the ones that made the group inclusion filter. And what's nice about these is that they're done automated. They don't require any of work on my part or bias. And then here's the buy watch that I put together this week. And you can see many of the same stocks. You can certainly pause it. Let me see if any of these things stand out as things that I would like to share with you. Many of them we've already looked at. Now I don't see anything that looks specifically interesting. And just to show you how I look at these, as I start to stick them in a list where I'm looking for patterns. I look for breakouts with high earnings. I showed you Jazz. It was breaking out. It's got nice earnings compared to the rest. Leaders such as Santoris, Lionsgate, Cymer, FleetCor, stocks that are pulled back that have already shown me a signal to run with a Kahuna or a pocket pivot. Wolverine Worldwide, Spectrum Brand Holdings. We'll take a look at Walmart. It's my favorite type of pullback ready to run. Pullbacks that don't give me a signal yet, but I'm watching for that signal are here. Lots of them this week. And then a couple of bottom fishing things that interested me. See Walmart is sort of an example of what I like. And then I want to say goodnight. So here's a stock which has really been a darling over the last couple of years. This is 11.50 up to 78. So that's a 50% run in 2 years. It had pulled back in late 2012 and ran along the 50 weekly number. There was a squeeze in the beginning of this year, February, March. The stock ran up to about 80. We all know Walmart. Its earnings per share growth looked rather tepid, but its pricing seems to be more related to how they do on same-store sales and how they compare to the estimate, not as a big growth stock. And here we have a pullback to that 50-day moving average. It had a kahuna on Friday. It had a green candle low on Friday. So it's given me a number of signals. So that's could be almost a bullish engulfing pattern, but holding at the 50 with the kahuna and green candle low. So it's one that I'm going to keep an eye on in a stock that's clearly in an uptrend. So on that note, I will say good night and have a great week trading. And I'm sorry for the hoarseness and the shortness tonight, but I think it's time for me to go to bed.